Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Chris White. He's the CEO of ViableMkts, and we're going to take a look at corporate bond market transparency. Chris, great to have you back with me at MarketSite as always. Now, you participated in the SEC Fixed Income Market Structure Advisory Committee event on July 16th. Can you give us an overview of the different kinds of topics discussed?
Yeah, I think these types of meetings are things that have been put in place by the SEC to really hear from market practitioners about key topics in the market. Where the SEC right now is when examining fixed income markets is they're starting to look at transparency in the corporate bond space with a bit closer of a magnifying glass. There were also some other key topics discussed, the impact of MiFID II, whether or not electronic trading should be regulated in fixed income. So there were a lot of I would say, important issues that were being discussed in detail at this latest FinSAC meeting.
Now, your panel focused on pre-trade transparency, specifically in the U.S. corporate bond market. Why is that an important topic in fixed income?
Well, I think any market that's trying to evolve has to get to at least a basic level of proficiency around data. And I think that from a developmental standpoint, what we're seeing in the corporate bond markets is really different perspectives on transparency. I think for some market participants, they've got a better handle on where the market's being priced. For other market participants, they're completely in the dark. And so discussing transparency is a key to what the SEC wants to resolve from a regulatory standpoint, because it can impact retail. It can obviously impact the way the markets function on an institutional level as well.
All right, and there was also another panel on electronic trading regulation. Do you think that's going to really become the reality of the bond market going more electronic?
Well, I think that anytime you have a bunch of people meeting and trading, and we've seen growth in electronic trading in fixed income markets, there's obviously going to be some attention paid by the regulator. I don't think that there's anything going on today that's pressing regulation for electronic trading. However, what I would love to see, and I think the entire market would like to see this, is a bit more regulation around trade reporting for electronic trading platforms. Right now, specifically in credit, we have no idea what the true impact is of electronic trading on the market, yet there's a lot of talk about what electronic trading is doing or will do in terms of resolving liquidity issues in the market. Simple rules around reporting a trade as an electronic trade that has occurred on a platform, whether it's an ATS, registers an ATS, or whether it's just an RFQ platform, would be incredibly helpful for comparing that to overall market volumes.
All right, now how about MiFID? I'm sure there was an impact on European fixed income markets now that it's in effect.
Well, that was one of the more exciting topics. I think the SEC has been had a great strategy around regulation here, which is let's let Europe go first in terms of putting regulations around the fixed income market, and let's kind of learn from that. So, MiFID II, I would say, is a canary in the coal mine for U.S. regulators. What was interesting about the panel is there seemed to be an undertone of complaints about the way MiFID was impacting the marketplace. From a readiness standpoint, I think the costs were somewhere in the $4 to $5 billion range, what market participants were having to pay just to do the analysis and implementation for the new rules in MiFID. And this makes sense. It's a 30,000-page rule book that basically defines MiFID II. I think the stat was 1.7 million paragraphs.
Wow.
So, I hope you have some time later this summer if you really want to dig into
in my spare time, on my
yeah,
days off that I actually get.
But I think the broader question that's being asked by the SEC is this prescriptive regulation really impactful, or can it have a positive impact on bringing liquidity and transparency into fixed income markets? I think the jury's definitely still out on MiFID II. I would love to see, for pre-trade transparency, the SEC give the market a little bit more room and see what we come up with as a marketplace, as opposed to starting to throw down rules and mandates for how people should comply.
All right. Well, thank you very much for joining me at MarketSite, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.